So today is Monday, 10th of May. So I've been disappeared for a couple of weeks. So on Saturday, we actually run our monthly workshop in our office here. I'll probably just, let you have a quick look, like what's our, that's our event space. So where you can see. Okay, and I think we had probably like 50-something people in the room from this workshop. Yeah, so and something very impressed is we actually have a 9-year-old boy join us in a workshop. And initially I thought, just a young boy come in because, the probably mom couldn't actually find a babysitter. But apparently he was really, really well prepared, and he's got his notebook. He was actually taking notes. Yeah, it was just very, very impressed that, he's really, really listened to what I was talking about. And there are times I was asking the audience, and he's always putting his hands up. And before I started talking about, so how about the property investors, what kind of people are property investors? He actually put his hands up and he was saying so it's those people, they, go and buy the houses and make them better and rent it out. Yeah, so I was very, very impressed. 9 years old. Yeah. And obviously I found myself that I was absolutely underestimated our next generations. Yeah. So it's very incredible. Yeah. So there's no excuse there. You are too young to do something. And today also I'm going to share with you is the inflation. I think because I think the price does goes up a bit. If you go to the supermarket or petrol stations, yeah, I think you probably kind of start to feel that the price does goes up. And of course, one thing is because the minimum wages has gone up. There's a minimum wages, so that has gone up, and that will actually kind of like affecting the the inflation on that, because the price does go up, unfortunately. Yeah, okay. The inflation is not going to be going too high, to actually trigger the Reserve Bank to wanted to actually control it. Yeah. So Reserve Bank, they got this what they are doing is they want to make sure the inflation is between 1 to 3%. Okay. Obviously, we are nowhere closer. Okay, so we are not there yet. And I think, again, Reserve Bank, they are still very, very conservative in terms of the economic. They're still very, very concerned that we are still recovering. We are not recovered yet. They want to push the interest rate even lower. I think they actually put a lot of effort in the main bank. They want the main bank, the trading bank, to lower the interest rate. They've got those cheap money. They want them to actually come and get a cheap money. But I think the trading banks are really, really reluctant, because obviously lower the interest rate, lower the profit. Yeah. So they actually didn't want to actually get those cheap monies offered by the Reserve Bank. So I do talk about a bit more, during my workshop. So if you are interested, I think we actually got a one coming up in June, but also in May, 22nd of May, we're actually running a special one. It's actually for Chinese customers. So if it's you feel more comfortable to actually attending a workshop in your language, Chinese language, Mandarin is going to actually run in Mandarin. Yeah. So that's actually will be our first workshop that's going to be run in Chinese. This is coming on the 22nd of May. Yeah. Our next workshop, our normal workshop is coming out on the 12th of June, Saturday, 12th of June. Yeah. It's a awesome day. If you want to check us out, on our Google review, I think a lot of people there just saying how great, they made a decision to actually purchasing the ticket and come to our event. A lot of contents, a lot of very informative, share a lot of what I know about in finance, what I know about in bankings, in terms of the whole economy, how they runs, So coming back to the interest rate here is something to be sure is cause I keep asking by people, what's my backup plan? Okay. All the trading banks, they're using this a tax rate to actually test to see whether or not you can actually servicing the mortgage before they even give you the money. Yeah. So the tax rate between all the main bank is 5.8% to 6.5%. So you have to understand that unless you could pass their test. So basically, this interest rate is actually applied on your new lending and also your existing lending. So only if you can pass that, and then you can get a main bank to actually give you the money in order for you to buy houses. Yeah. So pretty much you are in a very, very safe position. Yeah. So it doesn't matter if the interest rate goes up to, like 6.5%, you are still okay. But come back to, interest rate. In my view, no way they're going to increase the rate. Yeah, just again, coming back to the Reserve Bank, they don't believe that we actually, our economy has recovered, is still recovering. So they're still very, very careful of watching the market. They are still very, very reserved. They actually don't see that they're going to increase in the rate. They still keep talking about they want to lower the official cash rate. So if its official cash rate has been lowered, of course, the lower the interest rate will be. Okay. One thing is the bank is using the tax rate, which is 5.8% to 6.5% to test to see whether you can still servicing the mortgage before they even give you the money to buy houses. So you're pretty safe. The second thing is our economy is not recovered yet. We are still recovering. So Reserve Bank is still very conservative. They're still talking about perhaps they're going to even lower the rate. Yeah. So although, yes, the price does goes up, but it's still not in the level that Reserve Bank is going to be concerned and they wanted to actually increase in the rate. Yeah. Yeah. So hopefully that's actually giving you some insight into the interest rate and inflation. Yeah. Okay. So I'm going to see you next week and have a good day.